So the room is all yours for the next 30 minutes.
Excellent. I guess I should wait till I see the initial slide so everything is in sync. Let's see. All right. Looks like we're ready to go, and welcome everyone. I'd like to, well, my name, just to start, is Glenn Thompson, as you should see on the, well, as we saw a second ago. Let's see if I can get rid of this. All right. Good afternoon, everyone. Welcome, and thank you for attending. I'd like to thank Morgan, Chuck, and Eddie, the folks at DTI, and I've done this 1 or 2 times in the past and happy to be returning. As you see on the screen, I've been working currently for, well, almost 9 years in a mentoring capacity with the folks at Pacific Trading Academy. If after hearing the content today you'd like further information, you can reach us with the contact information you see at Pacific Trading Academy, 800-339-8588. As well, you can reach us indirectly through DTI or at our website. I wanted to talk about a very specific and kind of narrow area of analysis, albeit very important. It kind of Fibonacci analysis, optimal Fibonacci analysis. Fibonacci analysis in general provides the theoretical platform or basis or foundation for Elliott waves. So those of you who are familiar with the Elliott model are certainly familiar with this. Let me just kind of progress this here. Yeah, optimal Fibonacci analysis. And I'm going to talk about a very to this. The effectiveness of Fibonacci analysis is dependent on the range. I'm going to be talking about 2 elements primarily of the Fib analysis: Fibonacci retracements and Fibonacci extensions. There are other elements of this. Those of you who've heard me speak before know that my area of research is timing. That's an area I'm not going to get into today. I want to focus specifically on the price aspect of standard Fibonacci analysis, Fibonacci, which is kind of further subdivided into 2 categories, retracements and extensions. And the premise or the point I want to convey is the overall effectiveness of doing your retracements or your extensions is directly correlated with the range selection, the particular range you select. So those of us who maybe heretofore have been using this and have had less than precision with the results we're deriving, my conjecture is that this, to a large extent, may be a function of inappropriate range selection. In other words, the reliability of your projected pivot points and targets in terms of resistance and support directly relates to the initial range you select. And very often, especially when you're beginning out with this type of analysis, we normally gravitate to the extremes of a range, a top and a bottom. Sometimes that will be the case or appropriate, but 80% of the time that's inappropriate. So again, I want to show you some alternatives or some cues and ideas as to how to more appropriately and relevantly select an appropriate range. And then that ultimately you'll see the benefits in your results here. Let's see here. Use this. All right. Moving on, the slideshow here. Okay. The reason for this, again, and this is what I alluded to a moment ago, 80% market symmetry, expansion and contraction. In other words, and let me go back. Okay. All market swings, you've got rallies or impulsive moves and you've got corrections. 80% of those moves, of a market move, 80% of the time, you've got swings that are either expanding or contracting. A lesser amount of time, approximately 20%, the moves are symmetrical. In other words, the market's not expanding or contracting. Think of it from an analogous standpoint. You've all seen the logarithmic spiral. That's typically something you're going to textbook if you're first learning about Fibonacci, the number sequence and the corresponding ratios. And from the growth pattern inherent in the Fibonacci sequence, we can derive that logarithmic spiral. Well, in a pure theoretical sense, that spiral is symmetric. But in the real world, when we translate from theory to real application, you don't see perfect symmetry. We see expansion, contraction, and so this is an area, and you see this in market motion where you don't always see prices swings expanding in a perfectly, or contracting rather, in a perfectly symmetrical manner, but there's a deviation from theory. And so that's often a causative reason for why we get incorrect targeting in prices. So that's the problem. Let's move on and let's look at a solution. Let me show you a slide that I've put together here. All right. Here we have, this is, oh my, this is a soybean chart, I believe. I can hardly see it. I should have put the title here. But you've got a range, and I selected the top here. I can coordinate my mouse. All right. Let me just, instead of that, okay. Bear with me. I mean to work here. Let me just, right here. Oop. Huh. Hold on, I'm trying to get the mouse to respond to the pointer here. Let's just, let's try and use this laser printer. All right. Not seeming to effectively coordinate here. Bear with me, folks. I'll be, as soon as I can work out this little technical snafu, I'll be back in picking up the continuity of this. Let me get out of here. All right. I'm just going to use my mouse, and it's for the greater good of showing where on the chart I want you to focus your attention. Here I've selected, this is a daily soybean chart, front month, a range from a top to a bottom. By the way, when you're doing your retracement analysis, my belief is you should always, if you're looking to locate zones of probable support for the future, start with the end of the top and work backwards. You want to have a look back historically to a bottom. So this would be point A up here and point B. So what I've done here is select a range, and it's going to show a reason why an inappropriate selection will not get you will not always translate to appropriate ideal pivot points in the future. So I've projected, here's the top. I would run a Fibonacci projection, or in this case, retracement program, back to a starting point. This is a bottom that I selected, just a simple top to bottom range selection. All right, so I picked, here's my starting point range, here's a bottom range. All right, now, and I have our, let's see, the ranges, or the three Fibonacci retracement zones that I use, and I realize this is probably hard for you to see for some reason. It's but these are 38, 50, and your 38.2, your 50, and your 61.8 retracement, a probable retracement. When I select a smaller range, or the initial range here is from this top to this double bottom here. What I'm trying to illustrate on this slide is, notice that this is arrow 50% line has a larger range, and right, this is that horizontal. Right below it, this is the 50% line of the smaller range right here that this arrow is pointing to. The fact that this larger range has the 50% line, 50% Fibonacci retracement zone slightly above the lower 50% of the smaller range is an indication that the range, this entire move up, is expanding. That's evidence of an expansion. And typically, if you have an expanding market, I would be thinking in terms of decreasing the range that I would select to derive more appropriate future price targets. So this is, I realize, a little hard to see. Hopefully the next few slides will be easier on the eye, and we'll be able to point this out. recognizing that if we were having a symmetric move, you'd see the two 50% Fibonacci retracement levels more or less overlapping. The fact that the 50% degree of retracement of the larger range is present on the chart or in that portion of the range at a level above the smaller 50% is an indication of market expansion. And this is clearly indicating the problem. Let me move forward here. Range expansion, this is a daily, this is a, I believe this is the Swiss franc, daily Swiss franc chart. This is just the opposite. This is another case of a falling trend. Swiss franc over here, you've got, I selected a range, 100% level. Down here, here's a bottom. This is a small range right in here. If you can see, I realize that, okay, let me go some feedback. You're not able to see my pointer, so let me try the red laser again. It's important that you guys see this, hopefully. All right, want to see, you can't see anything. Are you able to see it now, guys? Okay. Can we see, can I get anyone to respond and let me know if you can see the pointer on the screen or the red laser? Okay. You can see it now. All right, at least we're able to. The problem, all right, I abandoned the laser, but hopefully this, at least you can see. The idea is this is evidence of range expansion that can introduce a modicum of error into our Fibonacci retracement analysis. This is a daily Swiss franc chart. Here we have, I'm looking to project zones of future resistance where that I might look at as a possible pivot point from which to sell. So I want to select a falling trend. So if I can coordinate this red dot, okay, right. No, this is a little problematic. All right. Oops. The laser dot is just not responding to my mouse for some reason here. Bear with me, folks. Okay. Yeah. That's really curious. All right. I've got, if you can see the let me try the pointer, the other indicator as opposed to the laser dot, because it's not. Okay.
Hey, Glenn,
Right.
I know
if you see what
it sounds like you, Glenn, it sounds like you can't see the laser.
Yeah,
We can see the red dot. We can see that red dot.
Yeah.
I just wanted to
I'm
let you know that.
It's not
Sounds like
responding
you
to my
can't see us
mouse, so
seeing
that's
it.
the.
It's
Oh no,
it's
I
jumping
see it,
around.
but it's not. I can't control it with any consistency.
Okay.
All right. Let me try. If you look directly above the red dot, you'll see a bottom, and you see the marking the start or that bottom there, and that's a range that I started with, going up to a top. Wow. Yeah. Hold on. Let me try something, the pointer, and see if it coordinates with my mouse here, because this is. Hold on, guys. I'll be right back. Hold on. I'm back. I'm trying to alleviate this technical glitch so that my mouse can appropriately direct the motion of the red dot. I was using the mouse. Can you see? If you can see my mouse pointer. All right. Can someone indicate? That would be the easiest. Can you? Let me just get out of the dot. Can you see my pointer? Can anyone? Because that's obviously. Are you able to see this now? The pointer on the screen. This is. Let's try something. Can anyone indicate if you can see the pointer? I seem to have will not be able to see the mouse. All right, let's try it again. All right, let's try this. Try it one more time, guys. This is a little frustrating. Well, okay, right there where the dot is, the haptic can hand off between my mouse and the pointer is just not, this is real frustrating. All right, here guys. All right, yeah, I'll just talk you through this, guys, because I'm having a technical glitch. For some reason, the pointer is not coordinating, or the laser pointer is not coordinating with my mouse. But right where the, okay. I am able to see the dot. Yeah, that I can see the dot. Everyone's seeing the dot, but it's not responding to my controls, so I can point to where I'd like you to see on the chart. Let's try maybe just this, the pencil pointer. Okay. If we, these pointers have a mind of their own, apparently. All right. This is frustrating. Wow. Right there. Well, I tell you what, I'm going to go on because this is, it's not seeming to work out. But this slide is a daily Swiss franc chart where we see evidence of range expansion by virtue of the fact, if you can notice where the arrow on the left side of your screen, the lower 50% line, is the range that I selected. The fact that it's resident on the screen at a level lower than the a higher 50% of a smaller range is an indication, as the Swiss is dropping, that the range is expanding. And once again, if you chose the smaller range, you would probably, or more likely, as a consequence of the range expansion, not derive future pivot points that are of any value to you. And so your response might be to assume that Fibonacci retracements don't work. So I'm just going to keep going in the time I have remaining to kind of hopefully convey the thrust of what I want to, the important principle here. Here's another example, lower 50%. Oop. Okay. All right. All right. In an expanding market, we want to tend to decrease the range. In a contracting market, okay. Evidence of range contraction. Again, this is a rising trend where the lower 50% line is of a shorter, or okay, of the larger range, your 50% retracement is lower than the 50% Fibonacci level of a shorter range, and that's an indication of contraction. So you'd want to switch to the longer range, and so evidence of the contraction or expansion will be a clue as to what range you should select. Should you prefer or be biased in selecting a longer range or a shorter range? This is a generic kind of way of thinking about it. So let me move on so I can kind of get through this. In an expanding market, decrease the range. In a contracting market, we want to tend to increase the range that we select to do our Fibonacci retracements is the idea I want to convey in a qualitative sense at least. Here's some specific points I want to indicate that all selection of a range, because again, the premise I'm working from is that Fibonacci retracements and then the consequential expansions, ultimately the veracity of them is going to be directly tied into the particular starting range. Cues to select correct ranges, directional cues, double bottoms, double, triple bottoms, things like that. Gaps, the idea that the way we want to incorporate gaps, if you see a gap in the midst of a move, is you want to select a range for doing your fib retracements such that the 50 level is kind of centered within the midst of that gap. Internal milestones, I'll look at that in a few slides that we're going to come up in a second. In other words, having selected a range, a way you can determine in advance the veracity and the reliability of, in terms of whether they will accurately peg in the future turning points is to the frequency of times you see hits. In other words, the market forming bottoms and tops. If you extend those Fibonacci levels, 38.2, 50, and 61.8, back into the past, the more times you see those three fib levels hit historically, that's an indication as to their likelihood of hits that you're going to get in the future. As a general tentative market analysis, occurred historically tend to be transported or exported forward into the future. From those of you who are familiar with the Elliott wave, third of third wave, strongest bars, you want to center your 50% Fibonacci retracement level or select a range such that your 50% fib level is going to be kind of in the center of that third of the third wave if you can identify it. Secondary tops and bottoms. Gann proved in the early 1900s that often selecting a range or doing all type of range analysis, whether it's whatever, usually secondary tops and bottoms are more appropriate than the extremes of a market move. So that's an important feature. Strong bars, when I say often will mark the start of and the end of a range. When I say a strong bar, long range, and where you have a scenario in a rising trend where the close of the bar is up in the upper third of the range, or in a falling range where the close of the bar would be down towards the bottom of the range. So these are a set of directional cues by which we can more Fibonacci retracement analysis. Moving on. That's just a listing of some things that some cues that I utilize. Let's see. Okay, what someone's asking, Mark Oliver's, or someone's asking what defines expanding contracting market. For any given move in a market, you typically have an impulsive portion or a rally and then a correction. And so these tend to expand. In other words, they don't. You might have a move where the market is going up, and then it'll tend to correct, and then you have another swing up. The correction and rally phases tend to alternate. If often you'll see symmetry, but you won't see that as often. You only see that about 20% of the time. More often, you'll see a contraction. Maybe one portion of the move, the rally or the correction will be in excess of a prior correction. It won't be symmetrical. It's only when you have symmetrical rallies and corrections, let's say on either side of a thrust, up or down, that if you're selecting the top and bottom of a range, that you reliable pivot points or points of resistance or support in the future. 80% of the time, as I mentioned earlier, you're going to have expansion of the range or contraction, and this is due to the nature of Fibonacci in the real world, the translation from perfect theoretical mathematical perfection to real world factors that I call frictional factors in a sense. Here's another range selected where you can see the arrow the way to highlight the 50% fib level that is centered in the midst of this gap here, and as such, that would be one cue that I've used to select a range. In this case, notice the upper part of the range, the 100% level, is not up at the extreme top. In other words, I've selected the particular range to derive my three fib levels by virtue of centering the 50% fib level in the midst of that gap. Notice it also has the effect of having the directional cue, that double bottom at the 100% level down here at the bottom. Okay? So this is evidence of a correct range selection. Okay, now let's move to the next slide here. Okay. All right. bottom. This is using selecting a range, okay? Range selection using the gap. Notice the gap is centered in the midst of this gap up. All right, moving right along real quickly here because I know I'm probably short on time due to the technical issues. Ultimate range selection using internal milestones. All right, here an internal milestone being the secondary bottom as opposed to the lower bottom to the right. This will enable me to select, or would be a potential cue that I might use to discern in advance where an appropriate range would be to do my fib ratios. Okay, again, moving forward. Okay, Fibonacci expand. Now this is same market. This is the pivot point. I did the expansions. Most people use all sorts, 38.2, 50%, 61.8, 1 or unity, 1.5 or 1.618, 2.618, 3.618. For expansions, I feel it's only appropriate, and this is my view, I only use 0.618, 1 or unity, 1.38, which a lot of traders leave out or omit for their expansion, 1.5, 1.5, and 1.618. I don't incorporate 2.6 or multiples of the golden ratio 1.618 because my thought is, or the thinking or the theory is, if the market moves that far, it's probably shifted into a different mode of behavior. So by the time I would reach, and as such, I expect error will have crept into the multiple of 1.618, 2.618, 3.618. So I don't use those fib levels to do extensions. Rather, once I get that distance, if the market reaches that point, I redo the extensions, and I'm going to projections. So I only use 0.618, 1 unity or 100% extension, 1.38, 1.5, and 1.618 for my extension Fibonacci work. Fibonacci retracement zone. This is a double bottom directional cue again. Quickly moving on here. Okay, here's a case of scouting for internal milestones. As I said, oh sucks. Okay. Wow, I seem to be having all kind of problems coordinating the slideshow with the mouse here. Is scouting okay? Here's the Fibonacci retracements as you see on the right side of the screen. The particular range that's selected, if you go back and the past, I extend that 61.8 or actually that's the 38.2 fib level. Notice it perfectly supports that historical bottom, market respecting the 38 fib level historically. You can interpret that as a likelihood to the fact that you see more and more hits. Notice how it also, if you go back further, I didn't highlight this on the chart, all the way to the left, how it contains that top. It contains a top and a similar degree of hits in the future. Okay. Let's move on. All right. Scouting for more internal hits. Notice the range on the right that I've chosen has the effect of perfectly. Now here's one that I use sometimes, this 0.79 or 0.786. Notice the particular range that's shown on the right side of the screen to do my 3 standard Fibonacci zones. In this case, I've added the 0.786. It has the effect of perfectly supporting that bottom that we saw on the left side of the screen. And that would be interpreted as an indication I have more correctly selected a good range, and I can depend on it. Moving forward. Crude oil extension. These are extensions of crude oil from an ultimate pivot point right here at the bottom, range selection around. Okay, here's another. Here's a 50%. You see the 3 internal horizontal lines. Those are your 38.2, 50, and 61.8 fib levels. Notice I didn't center or select the range in such a way that the 50% zone is in the midst of that gap up. Why? Because I used the 50% to select, notice that long bar right here in the center of the chart, probably the third of the third from an Elliott standpoint. That took precedence over utilizing the 50 or centering the 50% zone in the gap. You're trying to center that 50% Fibonacci level in such a way that it represents the strongest or most critical part to the market, and that will be a cue or a clue to you as to how appropriate a range you have selected. Okay. All right, corresponding Fibonacci extensions. Having selected your ranges, these are the for retracement. That ultimate pivot point at the bottom, you can see off of that bottom, I've run my 0.8, my unity are 100%, 1.38, 1.5, or 150%, and 1.618. Those are the set of six, those are, or five rather, Fibonacci ratios that I utilize for extension work and projections. Okay, verifying range from past milestones. This is in Google stock. Notice here the particular range on the right side of the screen that I've selected. In this case, it is a top. Be careful not to trade. Okay. Verifying range. I don't know if you guys are seeing this. Hopefully you are. This is verified. This is a Google daily chart of Google. You can't see it. I'm getting feedback. You guys are not, for some reason, the coordination of my mouse with what you're able to, Okay. I guess you're taking it back for me. Now they're finally, okay. On the Google chart now, you guys are there, and I'm not, and for some reason I've been brought backwards in my presentation. This is one of the most bizarre. There's a poltergeist at work. That's all I can say. On life handle, what did John say in the presentation before me? You got to play the cards you're dealt and play to win, because this is very frustrating for me because you guys can't see, or there's some type of inappropriate coordination between my cueing the particular slides and what you're seeing. Okay. I'm showing let's see here. Again, I'm not certain what you guys are seeing here. Let me move forward to the Google chart on my end with my mouse, because that's where we left off if I can. Okay. This is what I want to. I think we're on, if I can get it back. Okay. Notice on the right side of the chart, more recent activity, I've selected a range. In this case, it is from a top to a bottom. And the reason why, notice the 50% level. If you take it back all the way on the left, it corroborates with a past milestone and gave me some modicum of confidence that I had correctly selected an appropriate range. Also notice the double bottom at marking double bottom. Notice how, and by the way, we selected this range at the very top of the screen, the highest point you observe on your screen where that pencil is, the marker, and at this point, and so it was done before that, and then you can see the corresponding wave count is that, or my count at least, going down. Notice how the particular range selected had the 61.8 fib level pegged the end of that move, the fifth wave, from a wave standpoint, and that was the point after which, or from which, you were bullish, if you were going to look to trade the pullback. Can you hear me? Or I'm hearing somebody interject.
I know. Yes, this is Chuck. We're actually
Chuck?
running out of time.
Okay.
Yeah, we're running out of time.
I understand.
I think we've had a lot of technical difficulties. We'll try and get something done a little bit later on, but there's been some technical issues with this particular presentation, and I think best just to go ahead and give your information, and then we'll move on to the next presenter and set something up with you a little bit later.
Sure. These are just, I'll just kind of get to the end. And guys, again, I'm not certain what is causing it, but had a good amount of information. These are the gist of which, as at least verbally, you can see by the qualitative point I wanted to convey today through a series of slides that unfortunately we're not able to, due to technical factors, I guess, coordinate appropriately, is the idea that just to assume selecting an extreme top and a bottom for doing your Fibonacci retracements, and to assume that having done so you're going to get appropriate future pivot points of support and resistance is probably a very wrong assumption. Instead, there are specific cues and relationships we can look to that will more appropriately enable us to select the perfect or more perfect ranges, at least, so that that will be reflected by or at least points of which in the future you can work and trust. If you'd like to reach us again, you can do so with or reach me directly at, or indirectly at least, through Pacific Trading Academy, 1-800-339-8588. And again, this, the Fibonacci range selection can really make a difference in your trading. So, but it's a function again of range. It's based on, to merely assume that you'd select the top and the bottom of any given move is probably going to leave you shorthanded. So anyway, thanks. I'd like to thank Chuck and Morgan again for hosting, and sorry for whatever happened technically, but if you'd like more information, you can get into me and using the information on the screen before you right now. Okay, wish you guys profitable trading.
All right, thank you for your time, Glenn. And I'm going to leave that slide up there. We're going to move over to our desktop sharing. And Chuck Williams is our next presenter. Chuck, how's your mic working today? Okay, I'm going to need...
Can you hear me?
I need you to turn on the mic. Yeah, I got you now. You might want to turn that up just a little bit.
Okay. Better? Is it better?
Sir.
All right, great. Excellent.
Yes, it is. And let's go ahead and get that desktop sharing thing running, where you can show those charts you're going to be talking about.
Okay.